question, all right, for the benefit of those who would need more explanation, all right, more clarification on the cash flow. And I mentioned earlier that this question, cash flow, will be one question in your final exam. So I hope that by understanding this question, right, you'll be able to do well in your final exam for this specific question. Yeah. So let me share the screen on the tutorial question. Any one of you have a copy of the previous year's exam question? Maybe I think that once we finish on Thursday, we'll do the financial statement analysis. And then again, it's an optional. I can do the final week, we can do a discussion on the tutorial on the one set of final exam question. Yeah. So hopefully that will help you to prepare yourself for the final exam. So when is your final exam? Do you know your final exam schedule? It's on 12th of February 2022 on Saturday 9 a.m. Do you have that? Okay, your final exam is 12th of February on Saturday 9 a.m. Right, so we can have class on the following week, right, just to discuss question from one set of your final exam question. Yeah, but today let's look into your tutorial question. I believe that I have actually discussed question number 1. So let's go into question number 2. Right, question number 2, the comparative statement of financial position of Sophia. Can you see the tutorial question?
Yes.
All right. Of Sophia Berhad at 31st December 2018 is as follows. So you have 2018 and 2017. Right, this is your financial position. So you have land, right? So when you go along the information, for example, you are given 2017 and 2018, you go through the items in the financial position. You look at the land. For example, here there's an increase in 2000. Is there an increase or decrease of land?
Decrease.
So what could be the possible reason for the decrease in land? If initially you have 150 and then in 2018 you only have 100,000 of land. So what could be the reason for the decrease in your land?
Selling the asset.
I can't hear you.
Sell of
There's a
land.
disposal, right? There's a sale of land. Could be, right? Most likely that could be the reason, right? But you have to check further in your notes to the account, all right? So when you go along, see the building, there's no change, right? So maybe there's no buying and selling of building during the years. Accumulated depreciation building, of course, increase because there's a depreciation. Equipment, there's also an increase, so it means that there could be a purchase of equipment. Yeah, depreciation of equipment increases. Inventory increases as well. So remember that you have to take note of your current asset and current your liabilities. So how much is the increase here? How much is the increase? 192. Initially, it was 142,000 in 2017 and in 2018, 2018. So look at the differences. You know that there's an increase of 52K. Yeah, 52,000. Prepaid expenses, initially it was 16,540 and then it reduced to 12,140. So 16,540. If you want to look at the changes, right, normally is the current minus the previous year. Yeah, so 12,140 minus 16,540. So there's a decrease of 4,400. Right, decrease of 4,400. And then we're account receivable. So there's an increase of 77 minus 64. increase of 13,000, increase of 13,000. And finally, cash, there's a decrease by 57 minus 41. All right, so decrease of 16,000. 16,000. Okay. Ordinary shares capital initially it was 250,000. Now it increased to 280,000. So means that there could be, all right, an issuance of shares during the year. By how much? By 30,000. Right. But again, you have to check for the notes to the accounts. Retained earnings decreases, and then there's a bond payable. Initially it was 265 and then it reduced to 235. So what could be the reason for that? What could be the reason for the decrease in your bonds payable?
Pay the bonds.
Again? So when your bonds payable decrease, the possible reason for that, it could be that there's a payment, right? Or there is a payment, right? Or we don't call it as a disposal, right? Means that the bond payment, you pay part of it, right? Maturity, for example. And then your accounts payable is your current liability. You need to take note of the increase of 3,000. Yeah. All right. Bond payable will be reflected in your what do you call that? Later we look into that. Yeah, in your investment portion. All right. And then you are given the statement of profit and loss accounts and additional information. So you have profit before tax is 32,000. I mean, profit for the year is 32,000. Let me look at this. Let me highlight that. You have 32,000. Oh, warna dia tak cantik. Mari kita buat warna orange. Warna merah gelap sikit. Okay. So you have 32,890 as your profit before the year. Sales revenue, cost of goods sold, and then you have operating expenses whereby you have a depreciation and then other expenses of 4,400. Yeah, depreciation of 65,000. And then profit before tax, and then you have income tax. So profit for the, so which one that you should take? You want to take profit before tax or profit for the year?
Profit for the year.
Profit. So here is also profit for the year. So I believe that it has to be the profit for the year. Yeah. So it means that you take into account your income tax expense. Right. So it means that from here you only have one non-cash expenditure. All right. Your depreciation. The company sold a piece of land at cost. Right. So you have to check what would be the disposal of the land. And then you purchase equipment 70,000 for cash and all equipment costing 40,000. So there's a purchase and there's also a disposal, right? So for your equipment, you have to take note of that. So what happened is that for this equipment, you purchase new equipment cost you 70,000. So that will involve remember your cash flow, there are three activities: your operating, and then your investing and your financing, right? So your new equipment is under the investing. So when you purchase, there will be a minus 70,000 cash. Because why? Because you pay by cash. But at the same time, you sold your equipment, right? Your sold equipment cost 40,000 and you sold that for 25,000. So which one that cash in? Cash in is the 25,000, right? So the cash in is to 25,000, but because there's a disposal, you have to check on the gain or loss on the disposal, right? So later we look into how to do that. Then you have a cash dividend which is paid. So when you talk about dividends, you have to see whether is it paid or is it proposed. Is it payable, right? So in this case, it's paid. And bonds payable were redeemed at par value. So redeem means that as if you dispose of your bonds payable. And then you also have an ordinary shares issued for cash. So remember just now we see that there's an increase in your shares. So that will be reflected in your cash flow. So you are required to prepare a statement of cash flow. And then how did Sophia Berhad finance cash dividend when it is earned only 32? Never mind. We do the part A first. All right. So part A, you're going to put in start your profit for the year. Right. So let's look at the answer. I think that is it Sophia? Yes, Sophia. Right. So we start with the profit for the year. How much is the profit for the year? 32,890. So don't forget your title of the cash flow. Put in the first one is the name of the company, statement of cash flow for the year ended 31st December 2018. Right? So this is your operating activities. Right? The first one we start with a profit for the year, which is 32,890. So careful, yeah. So you have two types of profit here. One is 45,390, and then you have income tax, and then you have profit for the year. So make sure that you take the profit for the year, yeah, to go into your cash flow. So you start from 32,890, and then what you do is that adjust, in this case, they adjust for non-cash item. Right, the first one is that you have the depreciation of 65,000. So plug in your 65,000, add on. Yeah, because it's a non-cash item, so you add back in your cash flow. So you add the 65,000. And then there's a gain on disposal. So how do you actually do this gain on disposal? Look at the asset that you will dispose of. All right, so you have an old equipment that costs you, right? Cost is 40,000. And then what is the accumulated depreciation of the equipment? Right, you have accumulated depreciation of 17,000. Right, 17,000. So what would be the net book value? You compare the cost and the accumulated depreciation. So 40,000 minus 17,000, your net book value is 23,000. Right, but how much is your disposal? Right, disposal price is 25,000. It means that the net book value of the asset is 23,000, but you managed to sell the asset for 25,000. Is that a gain or a loss on the disposal?
Gain.
Gain on disposal. Why is it gain? Because you are able to sell the item more than the net book value, right? So your gain on disposal is 2,000. Right, so this is how you compute whether, whenever there's a disposal, this is how you compute whether there's a gain or loss on the disposal. So when you have a gain, remember that gain is an income, so you have added in your, so where is this reflected? Actually, this reflected in the operating expenses here. All right, but that include gain on disposal. So bila gain, you have added in arriving to your profit for the year. You want to adjust for the non-cash, so bila gain, what you do, you minus. Right, is that clear? So when there's a gain on disposal, you minus, but if you have a loss on disposal, you add back. Right, okay, and then, all right, the second part is that you have to look at the changes in your current asset and current liabilities. Remember that, remember for your current asset, so you have this part is your current asset, 3 items: inventory, prepaid, and accounts receivable. All right, cash will be reflected at the bottom. So your inventory, there's an increase of 52,000. So remember, if your current asset, remember the table that I showed you last time? Mana I tunjuk kat you? Sekejap macam mana nak buat ni? Ya. Buat pula. Download. Let me check. Answer. Right? Can you see this? This summary table of the changes in your current asset and current liabilities. So when there's an increase in current asset, you minus, right? And then you nak ingat yang mana? Which one? So it means that kalau you nak ingat one part, alright, if there is an increase in current asset, you minus, but increase in current liability, you add, right? Because it's the other way around when it decrease. So I will remember current asset, if increase, you minus, current liability, if increase, you add. So I would remember it like that. So if I say that inventory increase of 52,000, Current inventory is a current asset, increase plus or minus? Plus or minus? Again,
Minus.
inventory is a current asset. So when there's a current asset, there's an increase, you minus. So you minus 52,000. So that's how you got minus 52,000. Right? And then you have a prepaid expenses. Prepaid expenses is a current asset, but there's a decrease. So if increase you minus, decrease maknanya you add. Right? You add 4,400. Account receivable increase of 13,000 means that when you increase, you minus 30,000, right? And then accounts payable is your current liability. There's an increase. Kalau current liability increase, you add. So you add 3,000, right? So from there, you add on together whatever you have here, 32,000, right? You plus all the changes in your non-cash items as well as your adjustment for your current asset and current liability, you'll get a 38,290. So I will put it here. All right, 38,290. Is that clear? Right. So the second one is that you go into your investing activities. Yeah. Investing activities here, what do you have here? Look at the notes to the accounts, or you can look at here, right? Or you want, which one you want to look? Right, the company sold a piece of land at cost. Right, so it means that what would be the cost? You just take this one, right? So 150, and then you only have 100,000, means that there's a decrease in land, and the note says that there's a disposal. So you look at the decrease here, 150 to 100,000, there's a difference of 50,000. So when you sell land, all right, at cost, it means that there's no gain, no loss on the disposal of the land. Yeah. But when you sell, actually, is that a cash inflows or cash outflows? When you sell your land, you get money or you pay money?
Inflow.
Yes, cash inflow. So bila cash inflow means that it's a positive. So for that, you have disposed of land, you have a plus of 50,000 cash, right? But when you sold your equipment just now, all right, remember that note number 2, it says that you sold your equipment for costing you 40,000, but you receive cash of 25,000. So the sold of your equipment, you receive cash inflow of 25,000. So that put into your cash inflow from your investing because you sold your equipment. So you have plus 25,000. But then remember, you also have purchased your equipment, new equipment, you purchased 70,000 cash. For that, you have to minus cash from your investing activities. Yeah. Because of that, you will see that the net cash flow from your investing activities is 5,000. So far, so good, everyone? Are you
Yes.
following?
Yes.
Okay, good. And then we have the financing activity. Yeah, financing activity. Let's look at the note to the accounts. Cash dividend paid 59290. So dividend is part of the financing activities, but now you pay out dividend, so there's a cash outflow. So how much is the cash outflow? 59,290. So it's a decrease in your cash. That's why you are going to have a minus. Right? You pay out dividend 59,290 minus, right? And then bonds were redeemed at par value. So how much you redeem? Look at the par value. In this case, initially it was 265. So and then 235. So how much is that? That's a decrease of how much? 40,000, isn't it?
30,000.
40, 50?
30.
Or 30,000. All right, okay. I just put in here decrease by 30K. Yeah. All right. So when does decrease? So in this case, remember that you bond payable. So you have to when you redeem your bonds, it means that you have to pay out your bonds to your bond holders. So when you pay out, it's a negative cash outflow. So when it's a negative, that's why you put a negative figure there, right? In other words, it's a cash outflow, so that's why you put a minus. You understand that? So if you redeem your bonds, you have to pay your bonds holder, so cash outflow. But if you issue bonds, then you receive cash, so that's a cash inflow. All right. And finally, you do have a issuance of shares at cash. Ordinary shares were issued for cash. So how much is it issued? You have to look at the changes here. So your cash, where's your ordinary shares? Initially it was 250,000. At the end of 2018, it became 280. So there's an increase of 30,000, right? So increase issue of shares mean that you issue shares, you receive cash, so that's why it's cash inflow. Yeah, so that's how you have plus 30,000. From here, common V, you see that you have a changes in the from financing activities is 59,290. Yeah, and then all right, you can see that what you can have is that you can have net. I would put it in other words, right? If I were to have this opening balance, you have cash, you have information on cash. Opening it was 57,000, right? 41,000 closing, so you can have opening of 57, closing of 41, so you should have changes of 16,000. But do you have that in your cash flow? So you can check on that. So what if you do, you take the net changes from the total from your net cash flow, from your financing, from your investing and your operating activities. So add on together, you do get that 16,000. All right, so that means that your answer here is correct. Right, so you can check your answer. First, look at the opening balance and closing balance. You know that you should have a 16,000, and then double check with the changes in the activities. So you should get the same answer. If you don't, for example, here, yeah, let me say, for example, here you pay 20,000 here, right? I nak kat sini is actually your ni command Z. Commandnya opening balance was 57,000, closing balance is 31,000, right? So I put it like that. So here, right, your changes during the year is 31 minus 57. That's how you get, okay? Usually, here is plus 50. Closing minus 57. Right? 26,000. Apa 27? Huh? Hold on. Where's your cash? Oh, 57 and 41,000. 41,000, not 31,000. 41,000. All right. So your answer should be 16,000. Right? But if your cash flow shows that is a 26,000, then something is wrong with your cash flow. You get that? Right? Something is wrong with your cash flow, then you have to check what went wrong. Right? For example, here you know that this should be 30,000. So you have to double check what is wrong. Right? You know that the difference is 10,000 just now. So you check again your answer and do the correction. You should get the same, yeah? The changes, the net changes from the activities, 1, 2, from your financing, from your investing, and from your operating. So all these should total up to minus 16,000, and that should be the changes in your cash flow, right? Opening balance and your closing balance. You get that? Right? So it's good thing that for your cash flow, you can check your answer first. Right? So if your answer from the activities are not the same as the changes, your cash means that something is wrong with your cash flow. So double check on that. So if you get the right answer, then you know that at least you are on the right track. Okay? Right. So let's go into the third question. Any question? All right. Question number 2, you have the second part. where it says that how did Sophia Berhad finance its cash dividend of 59,000 when it earned only 32,890? So where do you get this 32,890? What is that 32,000? That is your profit for the year. So what it says is that during the year you have 32,890, but you paid out dividend of 59,000. So where do you get the money from? Anyone? How can you pay out dividend 59,000 when your profit for the year is only 32,890? How is that? How can you pay your dividend when your profit is only 32,000? Anyone? Nur Aina?
Not sure, madam.
Not sure. Logicnya company can pay or not? If your profit for the year is 32,000, can you pay out dividend 59,000?
No.
Okay, but the company do that. How can they pay out 59,000? Right? So when remember that when you pay out dividend, where do you get the money from? You not pay out dividend from where?
From the profit.
Profit, but profit for the year is only 32,000. Right? So you know that, remember that every year you do have one account called retained earnings. Nampak ni? Retained earnings. So during the year you have a balance of 174,140. Right? So means that even though your profit for the year is 32,000 only, but the accumulated profit is already 174,000. Yeah. On top of that, during the year, you also have issued additional shares. Where's your additional shares? So what you get when you issue additional shares?
Money.
Anyone?
Cash.
You get cash. Yeah. So you have additional cash of 30,000. All right. And then you also have profit for the year 32. So at least 32 plus 30,000 cash, you already have 62,000 cash. Yeah, but remember that this profit is not all cash. Yeah, because you do have non-expenditure, which is non-cash, 65,000. Right, there's a lot. So how you pay out means that you pay out from your retained earnings and the issuance of your cash, issuance of your shares. Yeah, so if you look at the answer here, you must have enough retained earnings and cash balances. All right. So although the profit for the year is 32, it's not equal to cash. The company has more retained earnings, right, in 2017 and after dividend cash balance of 41,000. Ni apa benda ni In other words, you say that when you want to pay out dividend, you must make sure that you have enough cash. Yeah. During the year, it means that cash balance, because of the beginning of the year, remember that how much is your beginning of the year? What is your cash? Where's your cash? Beginning of the year, you have cash of 57,000. Yeah. And then at the end of the year, you have 41,000. Why? Because it reduces because of the changes in the activities as well as the payout of dividend. So that's why you are capable, right? So if you look at your cash increase, if you were to analyze further, right, where do you get the cash from? Remember that you have this. This is not cash, yeah. This one is not cash. Is it cash? Ada tak dia tunjuk? Cash flow from operating. So means that all these additional 50 increase in inventory. So all these, the positive one is the cash inflow. Yeah, so sold land, you sold equipment, so you get cash from there. Right, then you issue more shares, so that's why you have enough cash to pay out for your dividend. Right? So in other words, we say that you must have a sufficient retained earnings and then sufficient cash, and this cash inflow during the year is reflected in your cash flow. Yeah, okay. Is that clear?
Yes, madam.
Okay, let's look at question number 3. Eh, ada berapa soalan? Question number? You only have 2 questions? No
Yes.
more question? Do you have any other question that you can share?
No, madam.
Alamak, dia tu kena buat apa ni?
Madam, I
Yes.
have question from past year.
Do you have that question?
Yes, madam.
Can you share that in your in the WhatsApp group so that I can download and put it in the Google Classroom?
Okay, madam.
Can you?
Yes, madam.
All right. I'll be waiting. Maybe I stop recording. Wow, banyaknya. Download. Oh, 17. So which question that we should do?
1920.
19, 20. Okay. Hold on. I stop recording because I will record new.